Hi, Kelly Eckholt here to update you with the key events of the week. So this week's big news was President Trump's decision to follow through on those election promises to impose tariffs on countries with large trade deficits with the United States. He started with the countries with the biggest deficits, so that's Mexico, Canada and China, but also issued some threats to the European Union. These measures, if sustained, will have predictable economic effects. It's likely that US growth will be lower, inflation higher, interest rates higher, and the US dollar is likely to be a bit stronger as well. For New Zealand, this is a negative economic shock. Thankfully, we're not yet subject to tariffs, but nevertheless, our exporters are going to have to contend with weaker demand from countries that are subject to tariffs. The exchange rate is going to be a bit weaker because that dollar is a bit stronger, and that will take the edge off for some, but not for all. So for example, for those exporters that are using manufacturing facilities in Canada or Mexico or China, these measures are going to cost them. For most central banks, they're going to take a more cautious approach in the period ahead. The reality is that we just don't know how this is all going to pan out. Will deals be done, or will the trade war intensify? We just don't really know. For New Zealand, we're still comfortable with the idea that the Reserve Bank's going to cut the OCR by 50 basis points this month. But after that, things get a lot more uncertain, and we think that they'll signal a more cautious approach. The ultimate direction for interest rates is likely to be guided by the labour market, and this week we learned that the unemployment rate did rise, but only as expected to 5.1%. What happens from here will ultimately be quite important. I'll be back to update you again next week.